welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Chao, Strategy Officer at Binance. Jin, thank you so much for joining us.
Thank you, Yonah, for having me. Pleasure to be here.
We're glad to speak to you. It's always great to speak to people, who I feel are kind of closer to the steering wheel of the industry than most. So it really is an honor to speak to you. Now, for those of our audience who might not be familiar with who you are, you want to give a little background, kind of who you are and how you got into blockchain?
Sure. Let's see. I've been at Binance now for just over 2 years, joining as strategy officer. Prior to Binance, I was actually with MBA China, leading strategy and corporate development there, primarily around investments and partnerships. I did a stint for 6 years there, and prior to that I was with Dell Asia Pacific, also doing corporate development. So I've really been in Asia for 11 years now, but prior to that, the first 15 years of my career were spent in the US, a little more of a traditional route with management consulting, business school, investment banking, and private equity. So really my career has been primarily in corporate finance, and then industry-wise, it's kind of a fairly broad gamut between, I started off in logistics actually, and then did investment banking in the internet sector. And this was back in the early .com days, back in 99, 2000, 2001, and then private equity in the real estate area. And then coming out to Asia, obviously tech on the consumer side with Dell, and then the MBA I would qualify as sort of a media and content business model. So shifting over to the crypto world, I was pretty familiar with the business models, and then quite familiar with deal making. But I think the thing that really attracted me to this space was the thought of decentralizing the governance around finance and overall money supply. Really sort of the promise of Bitcoin when it came out post the 2009 global financial crisis, which I was sitting front row for. And so I immediately recognized sort of the problems it was trying to address. Also realized how big of a transition this would be if it were successful. So it's going to be a long road. We're still in the early stages after 11 years into this, but making some very good traction. There was a big bump in 17, and then obviously I think we're in the midst of another bull run here. So hopefully we'll be getting closer and closer to sort of the imagined potential for cryptocurrency. And Binance specifically, I was fortunate enough to know a number of the founding members and senior management team prior to the formation of Binance. So, some of that was right time, right place. A lot of it was aligned interests and just a general kind of passion for changing this space, or trying to accelerate the change in this space. So, really proud and honored to be part of the team.
Well, I think you really provide a really unique perspective here on the space, because a lot of people in this space, they dove in blockchain, changing the game, ideological reasons. But you also have this really strong corporate finance background, investment banking, and so I wonder, coming from that more traditional sense, looking through the lens of this industry, just on an investment banking level, just on a corporate finance level, is this an industry that is growing, maturing, is a solid place, has a bright future? Taking off the glasses of that, like, blockchain is going to change the world ideology, and just looking at it from the corporate executive, is this an exciting industry to be in right now?
Absolutely. So the pace of change, the overall volatility, and sort of the speed at which trends come and go, it really has turned. For example, my last 2 years at Binance, I've probably dealt with the breadth and depth of issues I dealt with in the previous 8 years experience I did both at Dell and MBA. So from an executive experience standpoint, it's unbelievable. Also still, I wouldn't say that we're a startup at the time, but it certainly was when I joined. Anyone who's been in this type of environment knows that you need to wear a lot of hats. And so working at mature companies, as I had in the past, that are quite large and process oriented, and you have these cross-functional teams, and you have a very well-defined scope. You sort of understand what you're going into the office each day to do. Whereas, in this type of environment, both the industry as well as the stage of company that we're at offer just so many opportunities and challenges to grow. So yeah, it's been an incredibly enriching experience. Probably the only thing I could hope for is that we're a little bit younger, so I had the energy to kind of refresh as quickly as I had in the past. But at the same time, I think I'm also perhaps a guy that has a more years of experience than most people in the industry, so I can draw on sort of parallels I've seen in the past. And so when people look at, for example, the volatility within the industry, or the hype that comes with each sort of sharp increase or decrease, I've recognized this in the real estate bubbles that I've been in the internet.com bubbles and other stock market bubbles offline that I've seen. So I think I understand a little bit better how to moderate and interpret what's driving it and what will come out of things. So as different as this market is, all new trends in technology and things that change, they do have a similar pattern. And while this is a little bit more compressed and maybe happens a little more quickly, you still see the same types of trends. So I think from a managerial perspective, it's actually quite valuable to have that context in history.
Yeah, I mean, like you did mention, I mean, you have this tremendous experience, and I wonder which is more similar to Binance in the crypto industry in general. Was your experience at Dell or the MBA? Because on one hand, it has similarities with Dell. Where is this tech-based industry, mostly known by computer nerds? And on the other hand, like the MBA, because I feel like so many people in the crypto space, it's more than just numbers. Like they pick a team, they pick a project, they root for it, they defend it to the end of their lives on Twitter. So which would you say is more similar to the crypto industry and Binance? Is it to your experience at the MBA or at Dell?
Yeah, I would actually say it's with the MBA, because one thing that Binance has done incredibly well is as you mentioned, the branding and the community affiliation with our brand. We have quite a passionate, I would even call it a fan base, similar to the MBA. The other thing is that it's just such a global company now, but surprisingly, we've grown quite quickly headcount wise, and we've gotten fairly large compared to where we were a couple of years ago. But that said, if you look at the amount of business we do per employee, it's actually very, very similar to the MBA right now. When you look at our top line numbers, which unfortunately are confidential, so I can't share. But when I look at the amount of business we're generating globally, we're in the number of countries that we're involved in, and then the total number of full-time employees that are running this whole thing, it's actually very analogous to the MBA, because as global a brand as the MBA is, it's really under 1,500 people as an organization. So it really punches above its weight. So from that perspective, very similar organizationally to the MBA. From a industry perspective, a little more similar to Dell, although I don't think Dell's a great comparison, at least when the time that I was there. Perhaps Dell in the 90s, but when I arrived at Dell, it was already, Fortune 500, global, massive organization that frankly wasn't running as effectively and efficiently as it had in the 90s. And so, in the computer industry, I would liken it a little bit more to Apple, which, while large, is still incredible job with branding, great products, and really focuses on the user experience, which is something that Binance is much more focused on now after going through a couple of years of very, very high growth and and sort of product and service releases.
Mm-hmm. This is great speaking to you because you're giving all the good metrics. I mean, Binance, I believe, own now coin market cap, and I think you guys should supplement trading volume with amount of income per employee. That seems like a pretty good stat that you compare there with the NBA. So maybe add that metric to the list. But I mean, like you mentioned, this has grown. This industry has grown tremendously over the past couple of years, especially Binance. I mean, it's only been around for so many years, and I believe now Binance just hit the highest trading volume it's ever had. All-time high, I think, was $37 billion. So congratulations on the amazing work. Big year for crypto, big year for Binance. And even though it was kind of a wild year globally for the world, it was a really good year for Binance and crypto. What would you say was your highlight for 2020 of Binance?
Oh, wow. Tough to pin down a specific highlight. We launched futures last year, and in many, in fact, now it's a larger business almost in our spot market in a number of regions. So that's been a tremendous success. There's a lot of really, in aggregate, a lot of small initiatives that sort of add up to a lot. I would say the channels that we've opened up to provide access to users around the world have really rather unsung, but I think users will sort of understand that the fiat channels have been open, the C2C channels that we've opened, on the DeFi area, the lending and savings products that we've offered. I think all those things, there's not one sort of single initiative to point to that would be sort of the big success of 2020, but in aggregate, and then more recently, Binance Smart Chain. So I think that's also a function of getting larger as a company. It isn't just one big thing that we're focused on at any given time. It's a number of small things that really add up to something fairly large. But I think one of the big successes is continuing to grow the user base very, very healthily. And I think what we're seeing now in the markets, I think Bitcoin's flirting with an all-time high. I'm not sure if we passed it in the past hours or so, or in the coming hours, but it seems imminent. That's the type of thing that, nothing that Binance did, but the market is speaking, but will ultimately drive a further order of magnitude adoption, which we saw in 2017. And if and when that happens, the challenge will be on us to make sure that our infrastructure can handle that. Because at the end of the day, we do view ourselves over the long term as being an infrastructure provider. So we need to make sure that all the pipes are unclogged and everything's running smoothly. And then on the user-facing piece, the exchanges and the other products and services that we're offering, those go on top of the infrastructure. So I think the big thing for us coming forward is handling the next order of magnitude growth.
Mm-hmm. I mean, and that's the very interesting thing or unique thing about this industry is that so much of its volume is affected by the price. And so like the Bitcoin price, when it goes up, that's going to dictate a massive influx of new users to the platform, increased trading volume, increased value of total assets locked in many different areas. So how, as a strategy officer, how do you strategize going forward, planning ahead 1 year, 5 years, when so much of the industry and so much of the traffic and all the numbers involved are kind of a little bit out of your hands? It's kind of essentially dictated by the price of Bitcoin, seemingly. So how do you strategize when I'd say a lot of it is out of your hands?
Yeah, that's right. And we've done all kinds of regressive analysis on what kind of marketing campaigns or messages or channels really are driving growth. And there are certain things that are more effective than others. But as you say, at the end of the day, nothing is more effective than a sudden 5% increase over a day in Bitcoin price. That's going to do anything. That's going to do more than anything we can do with a well planned and well executed marketing campaign. So at the end of the day, to answer your question, we do not plan in increments of 5 years, which is something that was very common for me in the past, is you sort of have these 3 to 5 year long-term plans, and then you sort of have your immediate, annual budgeting. That's not something that would be really advisable, frankly, for a startup company, and then certainly not for this industry. So what we do is we look at things quarter by quarter as far as what we're trying to achieve, what is within our control over the next few quarters. And then we set ourselves up to react as quickly as possible to XYZ scenarios. So when we see certain trends emerging, we track them, and we don't necessarily try to stay ahead of them, because I think that's very difficult. And the only way to really do that is to, have 10 different initiatives and hope, and then hope for the one that ends up matching, having that product market fit. So rather than doing that, it's putting yourselves in a situation where as soon as that trend matures, you have sort of the settings in place to pivot to that immediately. So I think that's what we do quite well still as a company, is reacting very, very quickly. So not trying to be the first mover in any particular thing, because that was ultimately the users are gonna dictate that, particularly in the business that we're in. I would say, if you're designing an electric car or some kind of a consumer product, you can then dictate the trend, or in fact dictate demand. But in this thing, I mean, at the end of the day, we're talking about money, and money is a faith-based system at the end of the day. And so the users are going to tell us what they have faith in, and then we're going to, provide the services that support that.
Well, if we're talking about trends in the crypto sphere, especially right now, 2020, especially starting from this summer until now, it's DeFi. DeFi has really been the story of the second half of this year. And, like you mentioned, you can't really plan it, because if you've been to a crypto conference over the past 3-4 years, DeFi was not center stage. They were at the conference. They were that side stage that like 3 or 4 people would show up to, but they were not center stage. It was always there. No one was using it really. And then exploded. It seems like this summer, once with the launch of yield farming and just explosion and really finding its feet in the space. So at what point, because you mentioned you guys do have to react. So at what point did it change in the eyes of Binance? Did DeFi change in the eyes of Binance from, oh, that's something cool I mess around with on my own, to us as a company now have to actually take this in stride and start developing on it as well?
Yeah, I would say in certain parts of the organization, it was on the radar as early as late last year. But it sort of woke up the organization sometime late second quarter. And then, we were, within a quarter, we had sort of, MVPs ready to go and then launch. So I'd say, yeah, really the second quarter is when resources were really put to work on these things. But we do have parts of the organization that have sort of fingers on the pulse of a number of trends early on by design. So specifically, I'll call out Binance X, which works with the developer community, and Binance Labs, which works on early stage projects. So those things, we could kind of see those things kind of emerging. But then it's tough to kind of identify at which point is it sticking? So do you measure it by user activity, the size of the community, the amount of mind share it's getting in social media groups, et cetera. But it was clear to us in the second quarter that we needed to allocate some resources and move pretty quickly to get some services out.
Mm-hmm. Well, if we're looking at it right now, obviously this DeFi is super new technology, even relative to blockchain, which itself is a new technology. And I'm sure it will continue to evolve and grow. But right now, what we've seen is mostly DEXs and lending and borrowing protocols really be the main drivers of that space. And so I wonder, as a centralized exchange yourself, that really started off as exchange, but like you mentioned, you guys are building a whole ecosystem, a whole infrastructure with tons of other products as well. But what are your guys' feelings towards DeFi? I mean, especially the rise of DEXs, which I'm sure takes away a large volume of transactions where historically, if someone wanted to trade, USDT to ETH or whatever, that would, if they had a Binance account, they would just do that on Binance. But now with the rise of DEXs, and I mean, you can't beat their transaction fees. They have no administration fees or overhead. So how do you strategize, against this threat? Do you just say we're going to strengthen all other areas of our business that do require centralization and where centralization does bring value, or what? I mean, how do you handle this?
Well, not at all. I mean, we actually think that DEX is the long-term future, and we actually encourage that. Right now, I don't think it's a zero-sum game between centralized and decentralized. It's really if you were to focus on that and say, okay, as a centralized exchange, Binance.com should focus on trying to take market share from XYZ centralized exchanges, and then we should also try to take transaction volume away from DEX. That's really not the way to go in the current environment. I liken this again. I'll go back to the sort of early internet days when you had email services and search engines were the most basic form of things to do on the internet prior to e-commerce, interactive content, social gaming, et cetera. That's the stage that we're sort of in this email, like trading is just sort of the email stage, and maybe some of these DeFi services are like a search stage, but these are still rudimentary services in the whole context of blockchain. And so, and what's reflective of that is the fact that really less than or around 0.1% of the global population are even involved in this industry. So it's not at this point a matter of taking market share from one area or another. It's embracing all of these channels to grow the pie, because the pie has 2, 3, 4 orders of magnitude to go. Ultimately, if you look at sort of the crypto ethos, I think DEX is one of the things that over the long term, we think would be the natural convergence for users. But you have to recognize that there are some users that are ready for that. The people who understand the tech a little bit more, a little more savvy and a little bit more financially educated. But the masses, they don't adopt new technologies in this way. You can go back to sort of digital media, right? You start off with sort of beta VHS, and then you move to sort of mini disc CDs, and then you move to sort of where we are currently, where it's all digital. But it's all digital music, but digital content. But to get the user adoption, you got to get they're used to like pushing buttons, and you got to get them used to like sliding in a thing, and you got to get them used to being like, oh, you don't need the thing, you just need this little player. So that's sort of the steps that need to be taken for mass adoption. And so there's going to be a lot of transitory periods. But again, there is always this sort of niche, first adopters that get it right away, and those are that's the audience that's on DEX right now. It'll take many years, I think, for the mass market to go from adopting crypto and then getting comfortable enough to manage their own assets. But that's ultimately the goal, is that people do have control over everything they own financially. Yeah.
Mm-hmm. Well, I mean, that's always what we're all searching for, this mass adoption, because we want everyone on the party. We want this to truly be the future, and that's what's required. And I do think that, especially we are at the beginning stages, but let's say looking at the first 10 years of crypto, I think the biggest thing holding back adoption, I think it's fair to say, wasn't necessarily the technology. I mean, the baseline Bitcoin technology and blockchain technology and Ethereum works pretty well. I mean, Ethereum doesn't scale very well, but underlyingly, the security is tight. It's there. I think it's fair to say it's the UI and the UX. I mean, explaining to your mother, your grandmother, how to buy a Bitcoin and trade a Bitcoin, especially at the beginning, before there really were easy to use exchanges and whatnot, was a really trying task. And I think we've really improved upon the UI UX in recent years and recent times, especially, Binance does a big push at that. So, what do you think is that biggest challenge in that UI UX? I mean, at the end of the day, will just the idea and the fact that someone has to claim self-ownership that is responsible for their funds. Is that really going to be the line that stops people from going in? Like, is it just a problem of, oh, if we make Binance as intuitive to use as possible, then everyone will come in, or is there something inherently new and different about this industry that there just always is going to keep a certain generation out?
Yeah, I think you hit the nail on the head with the last phrase there, the generational thing, and that's exactly what it comes down to. Is that for most of the population right now, so that was one of the rationale for acquiring Swipe, which is a credit card issuing company, and that is what most people are used to doing. They're used to swiping a credit card, at least in Europe, US, a lot of the Western world. So if you're used to swiping a card, that's the behavior you're used to. And so, okay, here's a card where you can just swipe to spend your crypto directly. Even though it may be for the younger generation who understands technology, they get that you just need a wallet. And yes, the address is a little bit cumbersome, but they don't mind it because they understand it. But if I were to explain this to my parents and show them what a wallet address looked like, they would just immediately shut down. Where I say, okay, you know what? Here's a card. Just swipe this like you always do. Oh, okay, I get it. So it takes that kind of generational transition. Here in China, for example, they've managed to kind of skip that card step. There were bank cards and there are credit cards, but that only lasted for it was just starting to happen for about 5 years, and then all of a sudden, WeChat, Alipay rolled in, and now the entire country is used to a QR code. And so you're going to have a whole generation of folks used to paying things for QR code. If you suddenly change that and say, you know what, it's no longer a QR code, it's a retinal scan. They might be like, well, what? I don't get that. I like the QR code. So they're going to get that generation is going to be used to a QR code. Some generations can be used to a swipe. And then the kids that are coming up now, they'll be like, yeah, of course you use a retinal code. Of course I just pluck my hair and that's how I pay for things, like a DNA set. Like that may be what it will be. But again, you have to kind of have these types of interfaces available to each generation or culture or whatever the behavioral norm is for your region. And so that's one of the challenges. There's still post offices in the US because there is a generation of people that still want to physically mail a letter. And so you have this whole infrastructure in place because they're not changing that behavior. But to people our generation or younger, they just don't get it. Like, when was the last time we mailed a physical letter? But that's the way adoption works. It takes a generation. And I think that's also why, here we are again, 11 years into Bitcoin, and now you're starting to get the very tip of the early mass adopters, because that's how long it takes. And it'll take another 10, well, hopefully not that long, but it'll take another X years to get to the middle of the mass adoption. And then finally, you'll have the bulk of people once the channels are open for the vast majority of behaviors that they're used to using. So yeah, I do think that the user experience and user interface is going to be pretty critical.
Mm-hmm. And that's kind of like, I have this internal struggle because I think you hit it on the head. In order to really get mass adoption, you have to make it convenient. You have to make it familiar. If you just make it like they already know, they're going to use it, as long as it's cheaper and better and faster. And so on one hand, I do want this mass adoption, and I do want all this, all to be familiar, and it'll just be like using a credit card. But on the other hand, it held such promise. I mean, there really is this ideological idea of there's decentralization, changing the financial system, banking the unbanked. But as this industry grows, and I'm starting one part of me is starting to realize a little bit that maybe the system that we have, like all roads just inevitably lead up to this same just developed market that we already see in the traditional market. With if there's a lending protocol that really works, if there's a DEX, let's say Uniswap, that really works and gets bigger and bigger, then eventually that just becomes the centralized power. And even Binance, you mentioned you guys are infrastructure, and that's crucial. We need to build better infrastructure for the crypto sphere in order to handle mass adoption. But at some point, do you just become another Amazon? And how do you guys handle that struggle internally?
Yeah, that's a great question, and it's something that on a day-to-day basis, we're so busy just executing and operating that it's hard to step back and take a look at that. But we do recognize that issue, and I think that's something that we address once you get to sort of a critical mass in the industry. I still think we're far from there, and so the industry still needs quite a bit of handholding, or the average user would still prefer to be able to point to someone accountable for if something goes wrong. But with maturity, there'll be less of a need for that, and I think at that stage we start taking a look at some governance structures that are really just being pioneered right now, and we're keeping an eye on those things. And that, I think, could be pioneering for just corporations in the future as well. I'll also take a step back that says a lot of the things that I was talking about, these incremental user behavior or mechanisms that need to happen, that sort of happens in a system where things are relatively stable. The thing that changes all that is when there is a shock to the system. And now all of a sudden it's not just usability, but there's a fundamental shift in which system I prefer, which system I trust. And I think that's part of what's coming out of 2020 with the pandemic, is that people are now seeing the amount of quantitative easing happening globally, and again, they're seeing the shock. I mean, the average Joe may not realize this, but a lot of people do realize that with the quantitative easing, everyone globally basically took a 30% pay cut to your purchasing power. So, and it's going to take a number of years it's going to take many years for that to recover. So I think, but the people who do recognize that say, you know what, that's why there is a flight to things like gold or to Bitcoin, which is viewed as a uncorrelated asset to the established financial system. So these kinds of shocks, for better or worse, are good for innovative alternatives, and blockchain being one of them. Perhaps there's some others, but I think this has really put cryptocurrency front and center. And you see that with institutional investments. It's not that public these days, but there's a lot of banks, sovereign wealth funds, and governments now perhaps quietly investing quite a bit into Bitcoin. As that becomes more public and as that rolls more into the mainstream news and financial coverage, I think that's what will drive really the next round of sort of stampede into the space, and at which point we'll be sort of in the 1% to 2% global adoption, and that would then make Bitcoin. I mean, Bitcoin right now is the 5th largest currency in circulation. So obviously the two largest are the RMB and US dollar, and those have like 15 and 30 trillion dollars, I think, respectively. Actually, the RMB circulation might even be higher than that. So you're talking about between those two currencies, call it $50 trillion worth. The market cap of Bitcoin right now is, I believe, about 300 billion. So it's, again, 2 orders of magnitude away, but even then it's still a top 5 global currency. Again, another order of magnitude, price gets to even 100,000, and it's going to be a very competitive asset compared to traditional assets.
Yeah, and you mentioned that institutions are starting to come in, and even slowly publicly. You see, like with MicroStrategy and PayPal and Square,
Yep.
Some of them investing in Bitcoin, some of them allowing Bitcoin on their platform. So I wonder, you do have this finance background. I wonder, when we're looking at markets, all types of markets globally, the crypto market is really inefficient in terms of price and price discovery and opportunity to make money with arbitrage, and because it is so new, and especially now with DeFi and flash loans, I mean, there really is a lot of opportunity to kind of take advantage of the system. So are you surprised that it took the institution so long to get in, just on a financial level, just on the, like, weren't you like, I mean, you were already in the space for 3 years. Were you not looking at the inefficiencies and looking at your friends, in investment banking and going like, hey, do you guys not realize how much money you guys could be making just by taking advantage of these inefficiencies?
Sure. And I think on an individual basis, there's been a lot of interest in this, but at an institutional level, you have to understand that a lot of these institutions, the big banks, I mean, they are beholden to the regulatory environment as well. And so that's actually probably the bigger blocker going forward. It's not the technology and the user interface and experience. There's a lot of people working on that. And so I expect a lot of improvements quite quickly. But it's on the regulatory front that becomes a bottleneck to the institutions, because as much as there are institutions out there that want to get involved, they have different profiles. So perhaps a family, I'm sure a lot of family offices or smaller funds have gone in early. But if you're talking about, the large global banks, I'm sure there are pockets within those organizations that have wanted to, but they go up the ladder, and at some point, they have a compliance officer that's saying, no, not yet, right? So as much as they'd like to. So I think that's one thing to look out for over the coming months, quarters, and years on how that we're getting a lot more clarity, and there's more attention paid to this, both good and bad. But net, the more clarity, the better. And that will pave the way for really a rush of institutional money that I think they have been waiting to chomp at the bit, but they're waiting for the green light. Yeah.
And when we're talking about regulation, it is kind of there's so much innovation happening, and the regulators always have to keep up with innovation. So I wonder, what direction does regulation go? Do the regulators reach out to big players like Binance and say, hey, could you explain to us what's going on? What does the future look like? What's going on behind the scenes, and help guide us to regulation? Or does Binance have to, in the crypto community as a whole, have to actually reach out to regulators and constantly ask for clarity?
Yeah, well, I think it goes both ways a little bit. There's certainly some associations and lobbying groups that we do have membership with. They're probably more. It's probably more among the compliance community that there's a number of compliance-related conferences where these dialogues happen versus sort of this direct reach, because a regulator cannot reach to a specific party to represent an entire industry. So I think it happens more in these associations and conferences and in industry discussions. I think where we have more one-on-one interactions with is actually on where the rubber hits the road, is really on law enforcement. And I think that's something that we're very active in, spend a lot of time and resources cooperating with. And frankly, I would love to see, well, you're starting to see it debunked, like the sort of early view of crypto driving a lot of criminal activity. That conversation has really gotten much more quiet as people realize both users as well as investors, as well as regulators and law enforcement, realizing that, hey, the transparency on the blockchain actually helps these kinds of activities, not necessarily enables it or increases it. Yeah.
Mm-hmm. And you guys have actually taken steps. I think it was either today or very recently. You guys sent emails to your U.S. users telling them they have 14 days to withdraw their funds because they should not be operating in the U.S. Was this done by a specific request from a government, or was this you guys kind of just saw the writing on the wall with BitMEX? What led to this?
Yeah, I think in the current environment, it was prudent to do that. We set up Binance US last year specifically to address the US market, but users are creative, and so I think you don't necessarily always want to have a draw a line in the sand, and you want users to be responsible. But I think in the current environment, it was time to sort of draw that line and say, look. As much as we'd love to serve you, we can't, and you should know that we can't. And so, this is what needs to be done, because you have asymmetric risk happening now, where it's someone kind of finds a way around the system, and there's just too much downside for us. So yeah.
I mean, to be honest with you, I think it's a little ridiculous that the onus falls on you guys. I mean, as long as you have like I'm sure you guys have a geo restriction. If someone obviously sees the geo restriction and then downloads a VPN and goes around it, I think it's on them. It shouldn't be on you guys. You guys are doing your part. It's like getting Netflix. If I live in Israel and I use a VPN to watch a show in America on Netflix, that's not Netflix's fault. Netflix could try to stop it, but they shouldn't be liable for me using a VPN. So in that area, I must say, I think the whole thing's a little ridiculous. You guys do your part, and then if people want to get around it, they're always going to get around it. It's like yeah, go ahead.
Yeah, no, I couldn't agree with you more. I'd rather, I mean, if it were up to me, I would probably take I would err on the side of, look, it's clear in our terms and conditions, the users know what they're doing. This should be on us. That said, the world unfortunately just doesn't work that way. They go after the money. So.
Yeah. All right. Better safe than sorry.
Asymmetric risk is unfortunately there, and we need to protect ourselves against it. So.
No, 100%. There's a reason that you're strategy officer. You know this well. Now, okay, to switch gears a little bit, we spoke about DeFi and we spoke about Binance's role in DeFi. Binance launched their Binance Smart Chain, as well as you have that $100 million accelerator fund for blockchain developers to develop on it, to build upon it. Tell me, kind of what's your goal there? What's going on there, and what's really the main mission with the Binance Smart Chain?
Yeah, sure. This is actually really an evolution of the Binance chain, which we released last year to really drive sort of real use cases, having a very fast and high volume transaction-oriented chain. That said, in order to achieve those performance specs, it did not have the smart contract, and so that's what has constantly been requested and demanded by the community, and so that was the rationale for it. So it is compatible with Ethereum. We want it to be cross-chain compatible. We want it to be fast. We want it to be cheap. So I think it does benchmark quite well against current market offerings. And then we also added in some additional incentives by tying it to current.com account users, so that you can benefit from both offerings on the centralized exchange, as well as it being a driver of a DEX itself. So really trying to offer the best of both worlds. Again, just throwing out another option out there to the industry, and also understanding that there are users that are going to prefer a DEX because they're more advanced and are more comfortable in managing their funds, and don't feel that they require sort of a centralized customer service function. But it's still quite clear that the vast majority of users do prefer centralized at the moment, and probably will for quite some time. So that's really the evolution of it. The fund is really obviously to kind of encourage and attract developers, and actually also to help with market making and improve liquidity, because every exchange has a network effect. So to see the initial liquidity, you need to provide the market making there, and then it sort of builds on itself, and then goes on its merry way, hopefully.
Yeah, well, I mean, tying in a couple of things we spoke about, both the smart chain and the idea we spoke about that with quantitative easing, the whole world's pretty much taken a pay cut, and that's also brought down interest rates. Traditional interest rates are nothing, either negative or nothing. And so combining those two things, that's really seen the growth in the crypto sphere of returns on investments, of either yield farming, lending, where all of a sudden, instead of going to the traditional banks and getting 0.1% interest rate or nothing, in the crypto space, investors and lenders could actually get really pretty good returns, whether it be the crazy 200%, which is whatever, or more legitimate, not legitimate, but less risky, lower returns using a multitude of protocols. And so I think when we look historically at crypto, there was this idea of the HODL. I believed in this asset, in Bitcoin or whatever it may be. And I believe in its price to continue to grow. And so therefore, I didn't want to trade it. I want to hold it. I want to maintain my exposure. Then now all of a sudden, with this borrowing, with this crypto lending, with wrapping Bitcoin, with all these new financial products on the blockchain, we actually now have the ability and pretty easily to maintain that exposure to the underlying asset that you believe in, that you want to hodl, but then also allow it to do work for you and gain interest. So are we going to start seeing that, a shift from the exchanges, from the centralized exchanges, where automatically, if I'm already holding that crypto in the exchange, will we start seeing it more like a traditional bank, where the second I put crypto into my Binance wallet, I have an option of low risk, mid risk, and high risk, and it will just automatically behind the scenes be just yield farming for me while still maintaining my exposure to the asset? Is there any downside or reason that we aren't heading that way?
Yeah, I think all trends point to that direction. So right now it's an opt-in, and I think fundamentally it should be that, right? The user should be able to select. But then, the level of automation behind that, once they select their preferences and can change their preferences, that would be the logical path to take. So I do see things heading in that direction. And you're right. I mean, ultimately at the end of the day, all of this is driven by the macro environment of the fact that we do live in zero to negative interest environments, and people are looking for yield and don't want to see their hard-earned money eroded. So yeah, it's really interesting. So some of these solutions are very interesting. I would caution against sort of blindly going into all of these things just because it's what you've heard and that's the latest buzz. Always do your own research. Recognize that there is risk, and presumably the higher return, the higher risk. So that's that while there may be dislocations and arbitrage in the short term, over the long term, this is always the case. So, but some of these projects are really clever and well thought out. Others are rushing to market, and you see this again with every new innovation. You've got the folks that really think it through, and you have a lot of copycats as well.
And someone like yourself who kind of sits pretty high up and has a pretty nice view of the industry, because you are up top at Binance X and Binance Labs, and as well as being a very knowledgeable person who actually could analyze and understand what you see before you. What is the most exciting thing you see on the horizon for the crypto sphere, whether it be in DeFi or anything else? I mean, I do think you have a pretty good picture. So what is the thing you're most excited for going forward?
Yeah. Well, first of all, you're giving me a little too much credit. We have a lot of team members that really get into the weeds as far as the technical aspect and things like that. So credit really goes to them. From a bigger picture thing, the thing that excites me, and I think we're getting closer to, and that DeFi helps a bit, is you now are getting services that are priced and offered in crypto, right? So it's no longer a how many dollars worth of this is this, or how many euros worth is this. This is a, hey, I will lend my X crypto and get X% in crypto returns. So this is actually a service that's priced in crypto. And while it is financial services and within this ecosystem, it's still the start of something where what I would love to see is now you have, and it's probably going to be a service ahead of a product or a good, but a service that says, hey, I'm offering a service and you can only purchase it in crypto. And that's what drives adoption and payments and really the real use cases, other than speculative trading, which, let's be honest, has really driven the industry over the past 10 years. And still really one of the primary drivers. But now that you have things being priced natively in crypto and services offered only in crypto, that's the start of something much bigger. And what would be exciting to me is one day, you have like an actual, I don't know, Fortune 500 company that offers a product and service that it'll probably say, okay, here's the price in crypto, and then here's the price in US dollar, and here's the price in whatever. But it'd be interesting if the underlying price were the crypto price. I think we're a long way from that. But that would be the point at which it's over for fiat.
Well, I hope for your sake, as well as for all of us, Binance might be that first Fortune 500 company that does offer that service underlying crypto. Jin, thank you so much for speaking to us and kind of giving us your views on the space and a little behind the scenes about how things work at Binance. So I really do appreciate you taking the time. It was a pleasure speaking to you. And for all of our viewers here at Reimagine 2020, I'm Yonah Hochhauser. Happy holidays.